Hello, everyone, and welcome to PulseOne's Tech Talk Live. My name is Eric Anzalone, and I am a client success manager here at PulseOne. And this is our season finale, the final session of our six-part IT series that we created to help executives in small to mid-sized businesses navigate the ever-changing cybersecurity landscape and help them reduce the impacts of hacking and other security breaches within their organization. Now, as always, following our discussion, we will have a brief question and answer period. So if anything strikes your fancy while we're talking to today's guest, just go ahead and put it in our chat and we'll answer as many questions as we can get to. So first, I'd like to bring in our PulseOne star. He is a partner and co-founder of PulseOne, Chad Wiggins. And
hey,
hey, doing Chad? And our guest star today, this is Josh Goldberg. Josh has been a broker at USI for over 8 years. He focuses on mergers and acquisitions, construction, and real estate. Now, USI, it has specialized cyber insurance teams in each region of the United States. In fact, they are one of the largest insurance brokerage firms in the world. They're headquartered in Valhalla, New York. And USI is made up of about 9,000 industry-leading professionals across approximately 200 offices. Josh, welcome.
Thank you. Pleasure to be here, and thank you guys for hosting.
Absolutely. So I'm going to let you guys get right down to it and take it away.
Thanks a lot, Eric. Thanks for the introduction. All right, I'm excited here to talk with Josh. Josh, cyber insurance was our #1 requested topic and most popular. A lot of business owners, CXOs wanted to hear a lot about this. So as we jump in, thank you for being here and doing this with us. As we jump into cyber insurance, can you give me a brief overview, just a high level, brief overview of cyber insurance and what's included? Is it just a check? You put a claim in and you get a big check?
Depends who you ask. To summarize the cyber policy, this is a contract that businesses can purchase to protect themselves from various types of cyber attacks, breaches. And so I would bifurcate it into two different areas. One of which would be the actual capital backstop that would pay for legal defense costs, settlements, judgments. It could pay for things like regulatory fines and penalties. But the other interesting part about this policy that's a little bit unique compared to other types of insurance companies, other types of insurance policies, is that it includes various services that are typically built into the policy. And so some of those can include a cryptocurrency broker. For example, if you're breached and there's a ransomware attack and the hacker is demanding a certain amount of Bitcoin, then this policy includes a broker that regularly transfers crypto assets. It's typically always in Bitcoin. Also includes a public relations firm. So if your name goes up in the community as a company in which was breached, and this sort of deters people from coming to purchase from your business, then this brings in a PR firm to help repair your name in the community. Also includes a forensic cyber team. So if you're breached, a team can come in and does research as to how the company was breached and how do we mitigate that from occurring again. So things like that. And so I would say that overall, this is it's a turnkey system to deal with, unfortunately, with dealing with claims, which are pretty prominent in today's world. And it's allowed, businesses to continue operating, and businesses that don't purchase this have a pretty great risk of stumbling across things that they wouldn't normally expect in this process.
So you're not alone. I think that's what's most important is if you have the right policy, you get a pretty serious team around you to help walk you through the situation.
Right.
Yeah, it's great. So what's happening in your industry lately? We have a front row seat on what's going on. We hear about extreme rate increases different industries being targeted versus others. What do you, I mean, you're on the front lines. What are you guys seeing?
So I'll start with a little bit of history because that'll help, put together this story and this understanding of what's been going on, because there's been a lot of change. And so I'll start with a couple statistics, but 9 years ago, so what are we in 2022 now? So about 2013, there was a survey that went out to business owners, CFOs, risk managers, and the survey asked, where would you place the cyber risk to your business? And only about 6% of people responded that this, you consider this being the largest risk that a business would, can endure today. And in 2022, 44% of responses placed cyber as the top level of risk. And so what's gone on is that there's been an increasing awareness to these attacks, but that's also because we've had a hugely increasing amount of attacks, so both the frequency and severity of the attack. So we see more attacks now than ever before, but we're also seeing more devastating attacks now than before. And so the industry has had to react, the insurance industry has had to react with that. And so there have been various changes due to this, unfortunately increasing, activity in the cyberspace.
So, yeah. And then what industries are you seeing that are you seeing different industries more targeted than others?
Yeah. So some years ago, I would say that the types of attacks that you used to see were mostly theft of first-party data. So it'd be theft of PII, which stands for personally identifiable information, and PHI, so personal health information. This is data protected by HIPAA, and PII is typically data like your employees or your customers' names, addresses, social security numbers, bank account numbers, any sort of private data that could be used. And which was most prominently used to sell on the black market and or to create fake identities. And so back in the day, you used to have attacks targeting industries that would house a lot of this information. But things have changed, and the most prominent attacks now are ransomware attacks. So what we're seeing now is our industries that, and if you think about what a ransomware attack is, it's an attack that will prevent you from using your own software system. So the important types of businesses or organizations to attack are businesses that really rely on their software. And if they don't have access to their software, then they cannot run their businesses, and therefore their clients might also incur financial damage. So that being said, the industries we're mostly seeing being attacked today are professional services firms. So we're seeing in 2022 about 22% of attacks are targeting that industry. Public sector, so public entities, cities, so about 14.5%, which is a pretty huge statistic. Healthcare about 10%, software services about 9.5%, and so those are some of the larger ones. And then again, probably one of the biggest things that these have in common are that they really rely on their technology in order to do what it is that they do. And just to give a couple other statistics in comparison from last year. So compared to 2021, we've seen a 75% increase in attacks against educational and research organizations. We've seen a 51% increase in attacks against government and military organizations. We've seen 71% increase against healthcare, 146% increase against software vendors. So just businesses that just rely on their technology are getting hit harder than ever because they have no choice but really to pay these ransoms out, which is why they're such great targets.
Yeah. So I'm also hearing about companies that get breached, and then because they get breached, their client gets breached, or a vendor gets breached, and then the second business sues the first business. So the second breached business sues the first breached business, or a business has services that another business is dependent on, and that their service goes down. And so not only are companies getting going through a cyber attack, a ransom attack, but then they're also opened up for being sued by other businesses and under the errors and omissions. Can you talk a little bit more about that?
Yeah. So first, so most of the U.S. economy is a service-based economy. So I will speak to this as the majority of businesses out there perform services for other either individuals or businesses, and so those individuals or businesses rely on the services of this business in order to and if they cannot, and if they rely on those services and they don't receive those services, they might be financially impacted in a negative way. So if a company was breached and doesn't have access to its own technology, or its data is stolen, and another company is relying on the usage of that technology, for example, then they're very likely to sue that company that was breached, whether it was, whether the securities were not up to par, whether it's due to negligence or, rightfully, that they, were actually at fault of not inputting the correct security protocols. So yeah, companies have a huge errors and omissions exposure in addition to the cyber as a siloed. Have a huge errors and omissions exposure if they don't have the right controls in place.
Got it. Yeah, I mean, that's a big deal. That'd be getting hit twice. So you've also mentioned in some of our earlier conversations, like the rate increase that going up 200 to 300%, and the profitability of cyber insurance for the carriers is in the tank. And so tell me about those changes that are happening.
Sure. So again, as we spoke about earlier, this industry, the insurance industry, has seen a huge uptick in the frequency of claims as well as the severity of these claims. And so back in 2015, 16, 17, I mean, the good days of cyber, or what the insurance industry considers the good days of cyber used to be an extremely profitable product for insurance companies. And the combined ratio, so the underwriting loss or profit plus the fixed cost that the insurance company would have, so the administrative costs and payroll and so on, for every dollar that an insurance company would take in, on average, maybe 20 cents on that dollar would be paid out. So you'd have a pretty large margin on this product. And that was the case until maybe 2019. There was a small uptick to maybe the 30 or 40% range. And that's all normal in the industry and still considered profitable and attractive. But then in 2020, COVID hit and everybody started working from home. And, as you know, security systems working from home are certainly not as strong as they are when you're working from the office. And so because of that, again, we had a massive uptick in the amounts of attacks that we've seen, and they were getting through, and these attacks were successful. So because of that, insurance companies started to pay out much more than ever before, and it was not modeled in their predictive modeling. So they did not collect the correct amount of premium associated with the losses that actually ended up occurring. And so in 2020, those, that combined ratio. So for every dollar, we said previously, for every dollar that insurance company would take in, they would pay maybe 20 cents out. In 2020, that combined ratio shot up to about 60%. And then in 2021, it actually surpassed 100%. So for every dollar that the insurance company was taking in, they were paying out about $1.20. And so the other thing to consider is that the amount of premium collected throughout the industry has increased dramatically over these years. One, because not just because of the pricing increases, but because clients have become more and more aware of this product and have become more accepting that this is a real risk. And so there's been a huge uptick in the popularity of businesses purchasing this product. So when you have a huge influx in the amount of premium being collected, but then that ratio is now upside down and they're paying out way more, then it's sort of a double whammy for the insurance industry. And you end up paying way, way more than ever modeled for. So because of that, for any business owners who already purchased cyber, if you've experienced large increases in the past, 2 years or so, then you're right along with the rest of the industry. It's been pretty standard, and this is just the industry correcting itself and replenishing its surpluses so that it can continue to provide, this type of coverage.
Yeah, you can't have a service that's cost 120%. Can't have that for too long.
No.
Okay, so You've also mentioned in the past that the cyber insurance can be pretty broad as well. So does cyber insurance cover, whenever we hear cyber insurance, for me, I've always thought of just ransomware attacks or cyber attacks. And so cyber insurance covers you from cyber attacks. That's really not the case, right? It's really broad and it covers a lot more than just ransom cyber attacks. It covers a lot of technology outages, right?
Yeah, it's an extremely broad policy, and just to paint the picture again, there have been so many emerging threats in the cyberspace, and the way technology has developed over the past 5, 10, 20 years has been so robust and so quickly that the insurance industry is a reactive industry, first of all. So when different types of attacks or different types of claims happen, it doesn't even have to be in cyber. We then find a way to cover that, but it doesn't happen until afterward because we have to be aware of what these attacks are going to be. So anything sort of over time that has been considered a technology related emerging risk has sort of been dumped into the cyber policy, which has created a very, very, very broad policy, and probably much broader than most people know it to be. So one thing that we talked about, yes, is ransomware, which is also called cybercrime or cyber extortion on the policy, and so we've talked about that at length, in which somebody breaches your system, they do not allow you access to that system or corrupt that data, and you typically have to pay that hacker a ransom, typically in cryptocurrency, more specifically typically Bitcoin, in order for them to release that data. And only a portion of the time will they actually release the data afterward as well. We don't really know what it's going to be. So, you don't know how they're going to behave. And one important factor to know about that is that if the hacker is on the OFAC list, carriers in the United States by law cannot offer a ransom, cannot pay that hacker. So you cannot be a designated terrorist and still be paid by an insurance company. So ransomware coverage only applies if you're not already on that list. But a couple other areas of coverage to talk about that I think are interesting would be media liability, so website media coverage. This covers your website. So let's just say you're a business and you have your logo and your products on your website or any form of marketing really, and a competitor sues you, not because of any sort of breach or hack type of scenario, but just because they are alleging that you're infringing on their copyright information or you're infringing on their logo, could include libel or slander, other media coverages. This policy includes coverage for that. And again, that's sort of an example of one of those that have been thrown in over time because, prior to so much website usage, there was not that much litigation, due to marketing materials. A few other examples are, enterprise security event liability. So this is coverage when you're sued for monetary or non-monetary damages due to like a security flaw. Privacy regulation. So, if it doesn't matter where geographically your business is located, if you have customers, could be online customers that live in certain areas, could be California or the European Union, you're subject to certain privacy laws, and they're very strict privacy laws. So if you breach those laws, you could be fined in a pretty large way. The policy would typically cover the fines, penalties being paid out to regulatory bodies that are assessing that. PCI fines, so any fines that have to do with collection of credit card data. If you're sued for that, there are pretty strict PCI rules as well. And so and an additional cost that people don't typically think about is just the cost for credit and fraud monitoring services, which is built into the policy as well. We spoke about this before, but forensic or legal. So the policy will pay for a computer investigation of the breach, as well as legal consultation, costs associated with any potential breach. So there's a bunch of different areas that this covers, and I did not go through all of them, but it's important to talk to your broker about what exactly the policy does cover, because these are not all going to be the same. Each policy can be largely customized, and so it's important to know what the contractual language actually says.
Well, it's just interesting to know that it covers anything to do with technology, or not covers. You should look into it to see if your cyber policy covers any kind of technology outage.
Exactly.
Right. Yeah. Which is, I didn't know about. That's really cool. So talk to me about some cyber security controls that a business needs to be in place. So they can get a cyber insurance policy and they can be insurable. What security controls do they need in place?
Sure. So again, this industry, the insurance industry is a reactive industry. Previous to, I would say, 2020, companies who were applying for this type of coverage did not have to have all of these controls in place. And so this is sort of a new aspect to this type of coverage, just because we've seen so many losses that insurers are changing or have changed the way that they underwrite this coverage, rightfully so, to make sure that they're not jumping on a risk with zero protection. And so it's important to partner with a company like PulseOne on sort of the more of the proactive security controls. Because if you don't have these in place in today's world, you will not get any sort of quality policy, and it's almost worthless to apply for it. So the first step would be get the controls in place, then apply for coverage once you have your house set up. Some of the controls that the insurance industry looks for today are multi-factor authentication, which is extremely important. Endpoint detection and response, and extended detection and response, so EDR and XDR, 24/7 network monitoring and security operations center, so that's being SOC compliant, network backups and making sure that the network is being backed up pretty often, pretty regularly. Network segmentation is important, and related to that, privilege access management is becoming more and more important and is becoming a heavily looked at item today, and this is very, very new. So this is making sure that certain employees in the company have access to certain areas of your software, but more importantly, are restricted to certain areas, because you don't want to have one person or a couple of people that have access to everything. Want to make sure that the domain administrator assignments reviewed regularly. If you control or access data, you want to make sure that you have the right privacy controls in place. So things like that, and these are all regular items that PulseOne puts into place. So important to give Chad a call and have a conversation about that.
Perfect. I love it. We're the PulseOne. PulseOne is the proactive piece, and USI is the reactive piece, right? And so you put that together, you have more of a robust team. The security controls are definitely our expertise, and that's what we do, help you out, get you up to best practices. So are there any other considerations a business owner should know about when it comes to cyber insurance? Is there any last comments or anything else you want to talk about?
No, I think we covered a pretty
broad
way, but yeah, if you have any other questions, happy to chat.
Okay, I have one last question. So how bad is it to say yes if you've been breached and you go out to fill out apply for more cyber insurance, and that first question is always, have you ever been breached? How bad is it to say yes? Is your rate going to be 10 times what it used to be? Are you never going to get cyber insurance again? What happens if you say yes to that question?
Well, first of all, we have to always represent data correctly and accurately. So we cannot ever, if we are ever breached, we cannot say that we were not breached. We always have to represent ourselves truthfully to the insurance companies, because at the time of a loss, the truth is they're going to investigate. And if they find that something was misrepresented on the application, that gives them the ability to that gives them the out to not provide coverage. The whole point of purchasing this is to protect ourselves. But let's just say a company has incurred a breach of some sort in the past, whether they purchase cyber already or don't purchase cyber. The typical questions and if you think about it, the underwriter is just an individual, and you're trying to get that individual comfortable with the security controls so that they would believe that this is going to be a profitable account, that the amount of premium collected will not be as much as the loss paid out. And so at the end of the day, it's just a conversation, and it's good to make sure that you're bringing that, that you have very close conversations with your cyber underwriters and with all underwriters for all lines of coverage for that matter. But the reason that it's important is because there needs to be a clear understanding, and the insurers will happily give you best practices. So if you go back, you talk to a PulseOne or whoever you work with, and you make sure that those best practices are implemented, and you explain why a breach occurred or how it occurred and what we've done since to mitigate that, then that's fine, and that'll get them comfortable. And there might be an increase in pricing. I mean, it's hard to say. There's a lot of factors that determine that, but at the end of the day, it's all of our job. All of our jobs jointly to present the best story to the insurance company, and to make sure that our clients have are utilizing best practices, because even if you have the best coverage ever, dealing with a claim is a pain, and nobody wants to do that. So if there's any way to prevent that to the best of our ability, we should always attempt to do that.
So it's about what happens after you've been breached, and getting the carriers comfortable with the security controls you have in place and what you've done since then. So, I mean, that makes sense. It's cool. All right, Eric, I think we need you back to start the Q&A session.
I'm here.
He's here.
Josh, that was great. Just thinking about, we have health insurance. When you get in your car, you don't jump on the freeway until you have car and, automobile insurance. So if you're going to do business these days, which includes, doing business on the internet or, even through social media, where you have to, take precaution. You have to be covered, so to speak, right? You have to have insurance.
You should.
And of course, so get right out of the gate, everyone's questions are usually about, oh my God, how much is this going to cost me? Or, money and all that. So the first question is kind of a broad question, but hopefully you can answer it. Do we know what's the average number of small to medium-sized businesses that are attacked monthly, and what's the average cost? Do you have any idea? Can you ballpark it?
I don't have those statistics.
We have a little bit.
Okay. Chad doing his homework?
Yeah. The average is probably about 100 to 150,000 of the cost. That's like a business outage, paying the Bitcoin, all the soft costs and hard costs. We're seeing for about 100 to 150,000. We see them as low as like 50,000, and then as much as about 250,000. And really depends on like how long the business is out for, and then how much technology do you have to wipe and replace. It's kind of that range, but you're not getting out alive with, at the minimum probably have a $50,000 outage.
And I would add that there's a perception out there that SMBs are not highly targeted targets just because they're unknown, they're smaller. What hacker wants us? We don't have a lot of assets and so on. They're actually highly targeted, and I want to change that perception because their defenses are going to be much less robust than a large company, so it's much easier to hack. And so,
agree. We're seeing that too, Josh.
Yeah,
exactly. And I think this has come up in some of our other discussions, but the smaller companies, why go knock off a massive global bank when you can knock off your local grocery store, or who's not going to necessarily going to put it in the papers because they don't want their rates to go up. They don't want to. So they're going to be quiet about it. It's not going to be publicized. So again, there's lots of reasons why small to medium-sized businesses would be a prime target for bad actors. And so we have another question, just kind of, well, let's see. Are there industry-specific providers, or are all cyber insurance companies, for every industry?
Oh, that's a good question. So insurance companies have appetites in what they like to underwrite. And so there are differences. There are insurance companies all the time that, so there are many providers of cyber insurance out there today. Some are direct insurance companies, some are reinsurance companies, some are MGA programs that have a syndication of multiple insurance companies involved and participating and providing the capital to backstop that. And they all have different underwriting guidelines and specifications. And this is the same with all lines of coverage as well, in that each company is going to have areas that they feel comfortable with, or areas that they feel that their underwriters have certain expertise in, and areas that they don't want, and they feel like there's inherent risk that they'd rather pass on to the next company. So no, there certainly are specialized industries that certain insurance companies like to pursue and choose to not pursue.
Okay. Well, we have two questions that are sort of similar here. Small businesses like mine do not have money to pay expensive cybersecurity, and frankly, we don't have the exposure. We just discussed that. What is the best way for us to reduce our expenses? And we had another question: what can SMBs do to cut premiums in terms of processes or technical protections?
So I would say that first, having those controls in place that we talked about earlier, encryption, multi-factor authentication, backing up your network and your data, so on. These are important to have if you want to just have an insurance company consider you as an applicant that they would consider even covering. And if you do have those in place, then you'll most likely be able to get a pretty robust form, which is good. Are there pricing discounts to having the right controls in place? There are slightly. It's not hugely impactful. It's much more impactful in terms of having an insurance company just provide you the right type of coverage. Pricing is typically pretty dependent on the size of the business and the scope and nature of what the business does, and also their history of losses, if there are any. But I would say the way to reduce pricing would be, well, first of all, having those controls in place will help prevent losses. I can't comment on the expense of inputting these security controls in place. And then the other thing is that for those who are listening who have not ever applied for cyber coverage before, cyber is actually a very inexpensive coverage relative to most other types of insurance policies out there. Yeah, we've experienced increases over the past 2 years, but relative to your property, liability, auto, workers' comp, it's not one of the more expensive coverages by any means. So I'd urge you to at least look into it and explore quoting it. There's no cost in doing that.
Are there any specific incidents that are excluded?
Yeah, and every policy is going to be different, so it's important to make sure that you have a broker that knows the contract pretty well. But yeah, totally. I mean, if you apply for certain coverage, and one example is a company that doesn't have all those controls in place, you're going to very likely have a lot of exclusions on that type of policy. But it also depends on from which carrier you're getting the policy from. And sometimes the cheapest quote or the cheapest policy is, well, there's a reason it's inexpensive. It's by no means the broadest. And so it's important to balance out the cost, the actual premium, to what the contractual language is actually giving you.
What I've seen where businesses will fill out the form, say a couple of years ago, or the application, and then every year you're supposed to resubmit and say, yes, you have these security controls in place, and they might not go thoroughly and answer all the questions, kind of just, yeah, we have all these in place. And then you get breached, and then the insurance carrier comes and does their forensics, and they find out, oh, well, yeah, you have MFA, multi-factor authentication in place, but 2 years ago we said you needed MFA in more areas of your network, and so you actually didn't have it on the firewall, and so now they're not paying out as much, or something else like that. So it's super important when you're filling out that application every year that it's as thorough as possible. Yeah.
Yeah.
And one other thing that I would recommend, and this is not something that's widely done, but sometimes we actually introduce the client directly to the underwriter to start developing a relationship, and we introduce the MSP to the underwriter so that the underwriter can ask all the questions, and so there's a clear understanding between what exactly the MSP is doing for the client and how they're protecting the client and the insurance company. You will not get a better situation than that, because that's going to create the deepest understanding of the situation.
Yeah.
Yeah. We help a lot of our clients with these forms. They can be a little confusing. Yeah. The last question, again, it's a little broad, but are there any federal and state laws or regulations or mandates for cyber attack reporting or insurance benefits and limitations that could be sources of assistance for small businesses?
So with regard to reporting claims, so yeah, depending on what the claim is, if you have customer data or employee data and you haven't reported that, whether you haven't notified those employees or customers or reported the insurance company, then yeah, you can definitely get in trouble for not doing so. And secondly, there are clauses in the insurance contract where you have to report claims within a certain period of time to the insurance company, and if you don't meet those reporting requirements, then they have the option to not provide coverage. Did I answer a follow-up question to that?
No, well, I think that's pretty good. But so is granular is state to state, or is it kind of a federal oversight? Do you know?
It's going to be a combination of both, most likely. I mean, California has pretty strict laws, as you know, and so it's definitely going to be a combination of both. And it depends on the type of it depends on the situation, the type of attack, and what exactly occurred, whose data got breached.
Right.
There's a lot of dependence in that.
Right. And now, like on that, so let's say that you were attacked, and there is no silver bullet. You can get close and be well protected, but there is no silver bullet. So can you be held responsible if you have these measures in place and you still get attacked?
Totally. Anybody has and not just that, but any individual or company has the right to sue anybody for anything. So the beauty of this type of policy, and any policy, is that it provides defense costs. And that is also a consideration that people don't always recognize as something that can really add up really quickly. And so things don't always settle. There may be no judgment. The plaintiff party might walk away from the suit, but in the meantime, you might incur hundreds of thousands of legal defense costs. And so it's still important to have, sure.
Yeah. Gentlemen, any final thoughts as we wrap this up?
Yeah, well, USI and PulseOne, we've partnered together. And so when it comes to that proactive and reactive piece, or the concept, you can reach out to us at PulseOne and Josh at USI and get that full picture, get the proactive and the reactive covered with both companies. If you want an assessment, if you want us to look at and assess where your security controls are in place, and if you're up to best practices and you have all of them that you need, please reach out. We can help. We can help give you all that information and assess all the security, IT security in your environment.
That's good. Yeah. And here's our information. Of course, you can always reach out to us at our website. You can find Josh at USI. And
that's a wrap.
And that's a wrap. And this is it. Oh, yeah. This is our last one, our finale. And Josh, it was great that you were here to join us for this. And thank you for all those playing along at home. I think we're going to put these up as part of a series, I think, online. So they will be available to stream on demand, if you will. And
it's going to go millions of downloads.
There you go. That's it.
Great. Well, thank you.
All right, guys. Thanks, Josh. Thanks, everyone.
Thank you.